Listen up, folks. We're diving into a storage showdown today. It's Public Storage versus Extra Space Storage. Two heavyweights in the self-storage arena. Public Storage, ticker PSA, is the granddaddy of the bunch. Founded in 1972, it's the largest self-storage company in the US. On the other corner, we've got Extra Space Storage, ticker XR. This Utah-based upstart has been growing like weeds since 1977. Now, why should you care about these storage sultans? Simple. In a world where people are constantly moving, downsizing, or just accumulating more stuff, storage is big business. It's a $39 billion industry in the US. So buckle up, Cramericans. We're about to unlock the potential of these storage stocks. Let's start with the 800-pound gorilla in the room, Public Storage. This company is massive, folks. We're talking about over 2,800 facilities across 39 states. When people think storage, they often think of those orange doors. Now, let's talk financials. Public Storage has been a cash cow for years. In 2023, they reported revenue of $4.2 billion, up 5% from the previous year. But here's where it gets juicy, their dividend yield. As of July 2024, it's sitting at a mouth-watering 4.5%, but it's not all sunshine and rainbows. Public Storage has faced some headwinds recently. Occupancy rates have dipped slightly, coming in at 93.7% in Q1 2024, down from 95.2% the previous year. They're also facing increased competition from smaller, more nimble players. Another potential red flag is their growth strategy. Public Storage has been more conservative in their expansion compared to some competitors. Now, let's shift gears and talk about the challenger Extra Space Storage. These guys have been on a tear lately. In the past decade, they've more than doubled their property count. As of 2024, they're sitting pretty with over 2,000 locations across 41 states. Extra Space isn't just about quantity, though. They're innovating in ways that are shaking up the industry. They've been pioneers in implementing high-tech solutions like automated kiosks and mobile apps for customer service. Their customer satisfaction scores consistently rank among the highest in the industry. Extra Space has been killing it in the third-party management business. They manage over 800 stores for other owners, generating fees without the capital expenditure of owning the properties. However, their aggressive growth strategy comes with risks. They've taken on more debt than Public Storage to fuel their expansion. All right, number crunchers, this is where we separate the wheat from the chaff. Let's dive into the nitty-gritty financials of these storage titans. First up, revenue growth. In the last fiscal year, Public Storage reported revenue of $4.2 billion, up 5% year over year. Extra Space Storage, on the other hand, saw revenue jump to $2.1 billion, a whopping 15% increase. Now let's talk profitability. Public Storage's net income came in at $1.9 billion with a profit margin of 45%. Extra Space Storage isn't far behind with a net income of $860 million and a 41% profit margin. What about valuation? As of July 2024, Public Storage is trading at a PE ratio of 24, while Extra Space Storage's PE is slightly higher at 26. Public Storage's price-to-book PB ratio is 6.5 compared to Extra Space's 7.2. This indicates that Public Storage might be slightly undervalued relative to its assets. Both companies are money-making machines, but Public Storage has a slight edge here. Section 5, Market Presence and Brand Power. Let's talk about something you can't put a price tag on. Brand power. In the world of self-storage, having a recognizable brand can make all the difference. And in this arena, Public Storage has been the top dog for decades. Those iconic orange doors are like a beacon for people looking to store their stuff. Public Storage has spent years and millions of dollars building this brand recognition, but don't count Extra Space Storage out just yet. They might not have the same level of national recognition, but they're making up for it with a strong local presence. Their purple and green color scheme is becoming increasingly familiar in many communities. Extra Space has been leveraging technology to boost their market presence. They've invested heavily in search engine optimization and online advertising. When you Google storage near me, chances are you'll see an Extra Space location pop up. Section 6, Management and Leadership Showdown. All right, let's get personal. We're talking about the captains steering these storage ships. Public Storage is led by CEO Joe Russell, who took the helm in 2019. Russell is a seasoned veteran in the self-storage industry with over 30 years of experience. On the Extra Space side, we've got Joe Margolis as CEO. Margolis has been with the company since 2011 and became CEO in 2017. He's the architect behind Extra Space's aggressive growth strategy. Both CEOs have delivered solid results for their shareholders. But here's where it gets interesting. Their management styles are quite different. Russell is more of a steady-as-she-goes type, focusing on maintaining Public Storage's market dominance. Margolis, on the other hand, is all about growth and innovation. Industry trends and opportunities. Let's gaze into our crystal ball and see what the future holds. Urbanization is a major trend. More people in cities need storage. Public Storage is well positioned. Extra Space is betting on technology, investing in automated facilities. Specialty storage is rising. Demand for climate-controlled units, wine and art storage. Both companies are expanding in these areas. The industry is still fragmented. There's room for consolidation. Section 8, Investor Sentiment and Stock Performance. Let's talk about what really matters to you. The investor cold hard cash. How have these storage stocks been performing? Well, buckle up because it's been quite a ride. Public Storage has been a steady performer over the long haul. In the past decade, it's delivered an average annual return of about 10%, including dividends. Extra Space Storage, on the other hand, has been more of a rocket ship. Over the past decade, it's delivered an average annual return of about 15%. But here's the catch, with higher returns comes higher volatility. Extra Space's stock price has been more prone to big swings, both up and down. Investor sentiment towards these stocks has been mixed lately. Some analysts are bullish on the sector, citing strong fundamentals and the continued need for storage. Others are more cautious, pointing to rising interest rates and the potential for oversupply in some markets. One thing to keep in mind is the REIT structure of these companies. As REITs, they're required to pay out most of their taxable income as dividends. Section 9, the verdict, which stock reigns supreme. All right, Cramericans, it's time for the moment of truth. We've dissected these storage stocks from every angle. Now it's time to crown a winner. But here's the thing. In investing, there's rarely a one-size-fits-all answer. If you're looking for stability and income, Public Storage might be your best bet. It's the industry leader with a rock-solid balance sheet and a juicy dividend yield. On the flip side, if you're after growth and you can stomach a bit more risk, Extra Space Storage could be the ticket. Their aggressive expansion strategy and focus on technology could lead to higher returns down the road. Here's my take. Both of these stocks deserve a place in a well-diversified portfolio. Public Storage gives you stability and income, while Extra Space offers growth potential. But remember, folks, investing is all about your personal goals and risk tolerance. Do your own homework.